Okay, so let's start. Good morning all. Um, Yesterday we took a look at the dollar index, the fundamentals available. We concluded that dollar was going to sell. All right. Today let's take a look at a few fundamentals that will be coming up from my own what is it called? From my FX book here. We don't have much high impact news today. All right, we don't have much high impact news. In short, the only high impact news that we have here is on the euro, which is the retail sales that will be coming up by 10 a.m. Nigerian time. All right, so we'll be expecting a positive review. I want to see a positive outcome from that so that we can be looking for a buy on Euro USD or a buy continuation on Euro USD. Then we have a few just a few medium impact news on the dollar, okay, which is the 30 years mortgage rate. So we expect that one should come negative. That will also push the Euro USD to buy as well. But other than that, we don't have much news. The rest are just low impact news. So when it comes to fundamental analysis, we have two possible outlook. One is the normal economic calendar, which is what we have been accosted to. But what would they call breaking news? Breaking news is more like what the CBN governors are saying, what the government of the day is saying, and or whatnot. All right, so that's what drives the market. So based on that, I think we have a few good fundamental analysis that can give us directional bias for the day. All right, I think one of them was a review of what Powell said the whole of yesterday. All right, so Powell made a lot of decisions that were actually very negative. So I'm going to just take a quick read of most of them. So number one, this is Fed Powell's key comment. His first comment was the job report was certainly stronger than anyone expected, which makes dollar positive. That was what caused the crash. Okay, yesterday. Okay, made Euro USD to just drop back from all the buys. Then the strong job report shows why we think this will be a process that takes a significant period of time. Then we expect 2023 to be a year of significant decline in inflation. Now that alone has weakened the dollar. This comment alone is very, very dovish. So I'll be selling the dollar today just by this comment alone, because once inflation is down, it means dollar is what's weak. Okay, so currently the dollar index is already dropping. All right, then we probably need to do further interest rate increase. All right, when that comes, maybe in next March, we'll buy the dollar. But for now, next point was if data were to continue to come in stronger than expected, we'll certainly raise rates more. The 2% inflation is a global standard and not something the Fed is looking to change. The fiscal authorities are concerned about the debit rate. Yeah, this is another issue that is actually hitting the US dollar. Okay, the debt limit rate can only end with the Congress raising it, which has to happen. So until the Congress raises the debt ceiling, I will be selling the dollar for now. All right, unless I see another positive review. So Congress needs to raise debt ceiling in timely fashion. If debt ceiling isn't raised, no one should think Fed would shield economy from effect. I'm not actively contemplating the sales of security. It will be a couple of years before Fed's balance sheet decline comes to an end. So the US is just at the beginning of the disinflation process. Now, for me, especially the last three comments, we are actually very, very dovish. So I'll be looking to sell the dollar today based on this comment. Then another important news that came out alongside was China is raising gold reserves. Right, for those of us who loves to trade gold, I think this is good news for gold. So if China is increasing its gold reserves, it means gold will be a good buy. All right, now luckily dollar is also what weak, so I might want to continue my buy on gold. We already agreed that gold was going to do a retracement. So from the last high to the current low, technically this more like looks like how will I explain it? This looks more like a uh, this looks more like a, what is it called? This looks more like a W formation for a good buy. This is actually on H1. So I'm going to draw my Fibonacci all the way down here. I don't know what's happening. So this is my Fibonacci retracement. So at least I want to buy gold back to at least 61% retracement, which is around 1920. That is where my take profit will be. So, but take profits one will not be bad at 1896. That is my take profits one. Take profit two is 1908. Then take profit three is around 1920. All right. Now that doesn't mean if dollar is too weak, we're not going to extend all the way up back to this channel. But yeah, the 1920 level makes a lot of sense, but it's going to be a retest of this ascending channel that was broken. So a retest there would not be bad for us to be looking for the fundamentals that will possibly push the market down from here. But for now, my bias on gold is buy. Okay, so that's my first outlook. Then the Prime Minister of New Zealand, which is NZD, said they're going to increase minimum wage. All right, that also means so he said minimum wage increase as small inflation impact. So the New Zealand income insurance scheme will not continue as proposed. Then policy should be refocused on the expense of living. So now, for me, this is good for the NZD here. So my next good buy is going to be the NZD US. Remember, the dollar is already weak based on Powell's comment yesterday. So I'll still want to buy NZD back to the 61% retracement level. All right. Now for gold, let's just quickly go back to gold. Now you have to calculate your risk to reward properly. Your stop loss should still be around 1858, which was the stop loss I called previously since on Monday, since the market has been ranging. So your stop loss still remains there, which gives you a very good risk to reward ratio. Then we'll look at NZD. So if we're still going to buy NZD, our stop loss still would be around 0.6265. Then yeah, our take profits can be 0.643. This is about 61% retracement. Okay. Now, which makes a lot of sense. Also retesting this channel back here. So let's see how that pans out. Then the next breaking news is about is about the euro. Okay, so I think I have not checked this the comments of the CBN governor of ECB, the governor of ECB, but it was sounding more hawkish actually. Okay, so the rally, I think the rally in euro as it came to a halt after the dovish market appreciation of the ECB rate decision. Still, economists at General noted that the long-term point to the upside. So tactically, further profit taking cannot be ruled out. So the ECB may try to correct the market dovish interpretation of the rate decision and statement last week, and this could attract euro buying, but convention is likely to remain at lower until the CPI release in the US next week. So the long term for euro USD remains tilted to the upside thanks to the improved terms of trade, the boost in economic growth in China, and the narrowing of Fed's ECB policy spread and attraction attractive valuation. Main downside risk associated with low military offenses by Russia in Ukraine. So if the only thing that will make Euro USD to actually start selling now is if Russia continues, if there's high attack of Russia in Ukraine and escalation with the West allies and disruption in energy supplies. But as long as they're still getting low energy costs and all that, I think the Euro economy will likely retrace. But for Euro USD, I would love us to wait for, since there's an high impact news. That is my thing. I see a buy actually. I see a buy, but I would love us to wait for the news around 10 o'clock. Then we know we can now buy and stay on the buy for long. All right. So if you're buying Euro USD, you can take profit still remains around 1.088. That's 61% retracement. Stop loss will be around 1.065. All right. That is the next. Although the next key supports are 1.06, which is where the best stop loss ought to be. Yeah. So my take profits around. Take profit is around 1.08. That is the next support. Resistance zone, the first key resistance. So take profit 2 is 1.084. Then take profit 3 is 1.088. That is it. And I think another major news outbreak was for the pound. Yeah, was for the pound. But I think I've closed that news. I'm coming. Let me see if I can check it out. Okay, I think it was more like the current Prime Minister for UK is planning some economic, cabinet reshuffle and possibly wanting to grow the economy. So I think my third pair will be GU buy. Right, but I think just two pairs is enough for the day. Possible buy on NZD USD and Euro USD. Those are my two takes for the day. But looking at the indexes, is because of the index that I'm picking GU buy. So for the pound index, we still have a gap to cover that is yet to be covered. So my bias is still a buy for the pound index. Then for the euro, okay, we still have a risk to the upside too as well. So which is in line with our first TP1 1.08 for the euro index. Then I still see a buy on the Japanese yen. All right, back to this zone. Okay, let's go to the H4 chart. So for this market to have enough selling pressure, so I want to retest of going all the way back up to this zone. So most of the Japanese pairs have already done a very good run to the downside. Okay, especially NZD-JPY, AED-JPY, then Euro-JPY especially. Euro-JPY especially. Then GDP-JPY did massive drops yesterday. Okay, so but today I still want to, before I'll buy a pair like Euro USD-JPY, I still want to drop down to 130 before I see a buy. So I'll rather sell the JPY pairs, but I'll stay on the sidelines. I'm not going to trade much today. I'm just going to focus on NZD-USD buy, Euro USD buy. So any questions or any question? Any question? Yeah, good morning.
For the economic calendar,
okay.
Though like yesterday when someone asked about the way it operates, every platform have the way they rate their high impact news.
Yeah.
Yes, but there are some that are not even listed. Like if you should go to investing.com, I think
Okay. I'm currently at investing.com right now.
okay.
So I'm refreshing
Yes,
the page.
there's a particular pair there that it's more of a high impact news. That's crude oil inventories for
Put the
USD.
inventory for USD. Today is 8. Okay, crude oil inventory. So which for dollar?
Yes, for dollar. It's carrying three
What time,
star.
please? What time?
1630.
Okay,
That's it.
16:30. That is 4:30.
Yes. Yes.
Okay. Let's check. Let's compare with my FX book.
It's not even there.
Okay. Okay, it's not even there. Fine.
The
Now,
forest
as at
factor is not
4:30.
there.
Okay, I understand. I actually understand what you're talking about. Now, which
Okay.
makes a whole lot of sense. That is why you need enough data. So the forecast is the previous was you can use that for your analysis as well. Now I already forecasted that dollar is weak, isn't it?
Yes.
Now the previous was 4.1 million and they are
Yes.
forecasted 2.457 million. Now if it comes out negative, it means the dollar will keep selling. So you can use this to your advantage, which
Advantage.
makes a whole lot of sense. It does make a whole lot of sense. So
Okay.
by 4:30, we'll be checking out the outcome of this news on investing.com. All right.
All right.
Okay. Then any other question?
For forest factory,
Okay. I'm on
forest
Forest
factory.
Factory now.
Yeah. FOMC. This William is they actually put it as high impact news though.
Yes. That is by 3:15.
Yes.
Now look at what I do most of the time.
Okay.
It's once I'm in profit before any FOMC member is speaking, I'll trail my profit and
Okay.
listen, try to look for the speech on YouTube and watch. You understand? That is
Yes.
what I do. Yeah, that is what I do.
Okay. So we have to look out for this timing and observe our trades.
Exactly. So on Forex Factor, that is the only high impact news. You get it.
Yes.
Now on
Yes.
investing.com, the only high impact news is actually on Euro.
Yes.
So you see why I'm picking Euro USD buy for today. You get the picture. Today
Yes.
is Wednesday. Yeah, today is Wednesday. Now, luckily enough, they buy my last true for my bank orders. There is a bank order at 1.095, which is what's high, which is still very high. You get the
Okay.
point,
Yes.
which is still very high around this zone. Yeah,
Okay.
78% retracement. Okay, so I'd rather buy the only bank order for this week is around 1.06. It's around 1.06. So naturally, if I want to actually use stop loss, my real stop loss, I'll go and put it below that 1.06, 1.059 or 1.058. I know the market, that is the worst the market can do, which is almost 100 pips. Meaning my take profit will have to be 1.095. Okay, and I'll hold the trade till Thursday or Friday. Does that make
Okay.
sense now? Okay.
Yes. Yes. Regarding yesterday's trade for GU and the other pair that actually knocked us out on our stop loss, is there any adjustment that we can? Because it
No,
actually at the end of
but
the day it goes our
to answer
direction.
that, our major trade for yesterday was actually USD If I recall properly, I deliberately picked USD You understand?
Yes.
Because everything had confirmed there was a divergence and all that. Okay, for me, it's still going to drop more, but the market has done some moves. So I can't buy it from here, but I can't sell either because the stop loss is too high. Unless you are still holding your position. But I still see the market dropping to it hit our take profit time, which was 0.92. So My take profit 2 or 3 is at 0.915. So I still see a further drop on USD CHF. What happened was, see, I understand that fine, we entered yesterday and the stop loss was just below the low and it knocked it off and came all the way back up, which is fine. But sometimes it's not good to actually modify your stop losses because you have calculated a certain risk amount that is appealing to you. So if your target is to risk 1% of your account and you've taken a risk of 1%, allow the 1% to go because it becomes very easy to actually recover the 1%. Do you understand? So
Yes.
sometimes it's not too good unless this is especially for a competition account like you're trading FTMO or my Forex fund, where you are under certain rules not to break 5% in a day, 5% trade, or 5% loss in a day. Okay, but if you're trading your life account, your personal account, there are some things you can do. If you're very sure that G is going to buy, instead of using a stop loss, you can practically reduce your lot sizing, which is what I do most of the time. So what do I do? For a $1,000 account, I trade 0.01. So there's nothing the market will do. 100 pips against me is just $10. So there's nothing the market will do that I'm going to blow my account. Because I know the market is still going to what? Buy.
Bye.
Does it make sense now?
Yeah.
All right.
Okay.
Any
Thank
other
you.
question, please? No, you're welcome. Any other question?
You said for this for today